Time in trading is relevant. As traders, we don't measure time as a dependent variable, but we check the price range for the given period. What we are interested in is the prices, and by using several types of charts, we can analyze the market. We are checking historical data and we try to determine the future behavior of the prices. For most people, a chart is a graphical representation of data visualization. However, in trading, we need more. Charts are the first powerful tool in your hands, and the proper way to read them can help you to make a trading decision. For most trading platforms, you will see several time frames: minutes, 15 minutes, 4 hours, days, weeks, months, and so on. All financial data sets can be used from a chart analyst. Prices change in the market randomly as events hit the market, and many other basic rules we have analyzed. Everything becomes obvious after the market makes the move. As traders, we need to be one step ahead. We need to be able to identify and predict based on statistical probabilities. In this episode, we will see all types of charts: simple line chart, bar chart, and candlestick chart. Even though in this series you will see several other experimental uses of charts, by far this is what you need to master first. Charts are user-friendly since it's pretty easy to understand how price movements are presented over time. With the charts, it's easy to identify and analyze price movements, patterns, and trends. On the chart, we have the vertical axis, psi, represents the price scale, and the horizontal axis, x, representing the time scale. Prices are plotted from left to right across the x-axis. A price chart shows changes in supply and demand. A chart shows every buy and sell transaction of that financial instrument, in our case currency pairs. However, the principle is the same for any other instrument we want to trade. A chart incorporates all known news as well as traders' current expectations of future news. Now take notes: expectations moves the market. When the future arrives and the reality is different from these expectations, prices shifts again. You will master definition like expected, worse than expected, or better than expected as part of news trading. Most people that see Forex charts believe that this is a pure randomness and that there is nothing there. No doubt that this is a fact, however there are rules. This rule will be explained better in the fractal theory that we will analyze in future episodes. Traders adjust their expectations on future news, and the cycle repeats. Charts blend all activity from million markets participants, whether they are humans or automated systems, whether we have several transactions from retailers, market makers, banks, or AI. The changes is instantly being shown in the chart. Everything started from here. A simple line chart is a line that passes from all closing prices. As traders, this information is not enough. The prices from one closing price to the next closing price cannot be helpful. As we see in this example, most brokers give you the option to choose between the type of charts. I have changed to the simple line chart as this is the type of chart less used. When strung together with a line, we can see the general price movements of a currency pair over a period of time. However, as we said, this information is not enough. I will use as an example the daily Euro-GPY pair. Let's say that the pair was trending lower for most of the day. In the last session, however, the pair started reclaiming the prices really fast, and in a couple of hours has almost covered the losing ground. This reaction means that most likely the prices will go higher the next day. At the end of the day, still the prices will be shown that the pair closed lower. But the next day, this might be a sign that the prices will go higher. We will see this type of behavior in the candlestick charts that we are analyzing all types in a horrifying boring video that we are explaining all type of candlestick patterns. But it's too early to talk about them. It's simple to follow, but the line chart does not provide the trader with much detail about price behavior within the period. Time is relative in trading. We trade different time frames, and there is a link in the description to give you more information. With a simple line chart, all you know is that the price closed at X at the end of the given period. You have no clue what else happened. We cannot see trends, market momentum for the given period, and so on. The line chart will just show you the big picture. The line chart is also shows trends the best, which is simply the slope of the line. For people that are more in math, you probably understand more. The closing price for a given period are considered to be important. In other words, simple line chart sucks. As we advance in the chart, the second type is the bar. The bar chart is a bit more complex. The bar chart provides information like open price, close price, higher and lower prices for the time frame we choose. Bar charts help a trader see the price range of each period. Bars may increase or decrease in size, representing the price range for the given time frame we are trading. Many Forex traders use this type of charts to make their analysis. It's a genius and a very simple way to use it. The bottom of the vertical bar indicates the lowest traded price for the time period, while the top of the bar indicates the highest period. The entire vertical bar itself indicates the trading range for the period. As the market starts to move, the bars become larger. As the price fluctuations becomes quieter, the bars become smaller. This provides information for the market volatility and range. The bar chart is not the same as the typical bar chart we use in our presentations. The bar records the period's price and provides the most important information for the given period: open, high, low, and close prices. In this picture, we can see better the information we have mentioned. The horizontal lines represent open and close prices, while the top and bottom shows higher and lower prices. The bar chart provides information about the price range. Each segment represents a period. This information gives us more info about the pair's behavior. The bar chart also shows volatility that the simple line cannot do. Japanese candlesticks, the type of chart you will use. We have a link in the description below with all the information on how the Japanese candlesticks became the #1 type of chart. A Japanese rice merchant introduced the idea many centuries ago. The candlestick chart is similar to the bar chart. Candlestick chart shows the same price information as a bar chart, but instead of simple lines, we have a full body shape. There are no basic differences with the bar chart. Many traders prefer this type as it's easier to use. Candlesticks show again open, high, low, and close prices for the period. However, in the candlestick there is a body representing the range of the prices. They will help you identify faster a set of prices. This information might not be so easy to see with bars. Again, there are no differences with the bar chart. In this case, you can choose what suits you best by changing the settings to red and green bars. Using candlesticks will help you to scan the markets faster. Again, as we said, the differences are negligible. The body of the candle will have colors. The traditional colors are black and white. White means that the price is closed higher, and black is the opposite. Again, as we said, time in trading is relevant. We compare the prices based on previous candlesticks close prices. You will be able to change the set of colors based on the platform you are using. Many traders prefer black and white. The reason is very simple. A red color is very intense, creating negative emotional effects. Again, this is up to you. There are several advantages while using this type of chart. You have all the important information you need. It's easy to understand. Most indicators work best with this type of chart. They can show market psychology easily. For example, a set of several full body candles might be a sign of market direction. If you're thinking advancing in trading and you want to build your own algorithm, it's the easiest way to describe in coding. Again, thank you very much for watching. Go back, repeat the chapters you are not sure, and trade safe.